as we're marking them, and it's very important to do so that you would be as we're marking, you will be able to. Okay, this zone is being broadcasted as private. Hold on, guys. It's not supposed to be private at all. It's supposed to be public. Hold on. The YouTube is doing it as private instead of public. All right, let's change that in content. Okay, hold on, guys. Let me quickly do this at the back of it so that you guys will not just keep seeing all everything that I'm doing. Yeah. So let me change that. Just give me a sec. I'm gonna be sharing my screen soon. Let me quickly do this at the back office of this YouTube channel because it's showing private. Still live. Okay. Put it on public now. It's streaming public. So, which is great. We already have 4 people viewing it. All right, guys. Thank you guys for your patience. I'm coming back to share my screen in a moment. I just wanted to do some settings and we'll be back on few few minutes. So we'll be able to get started. Like I already said, get your laptop ready. If you already watched my weekly analysis, which I already sent today, um, I hope you watched it. Everyone have watched it. If you have not watched it, I will encourage you to do so because I'm not going to talk about those pairs that I've already mentioned on this particular live stream. So we're going to be looking at other pairs entirely. And this is also a kind of a swing trade. So it's a different approach right now that we're on. So I will encourage you to obviously look into those videos and bookmark them because we definitely is a game changer in the market, right? So those pairs, I'm looking at them to take them this week, and hopefully you join me. Yeah, that's what we're looking forward to do. Give me a sec. Let me quickly do this, and then we're done. Meanwhile, the comment section is very important that you use it for questions and also for contributions and your observations as well, depending on what your position is as a trader. And if you have any conflicting ideas about what we're saying, you can also use the comment section as well. And if you don't like what we're doing, also use the comment section. If you hate Trader Sabra, you can also use the comment section. Doesn't matter. We are all in a community to build ourselves up in the trading industry. So it is not a competition. So we are not competing at all. So yeah, that's what I think. And that's the way I think. And let's see. Let's go undo that. I will talk about this later. Okay, let me share my screen. Right. I'm back on now. I'm going to share my screen right now. Okay. I have 22 people on our Zoom. That's good for tonight. That's a good start. If you can see my screen, just comment. I'm already back on. If you can see my screen both on YouTube and also here, you can comment. So let's get started. All right. Okay. Wonderful. There are those coming in from the Telegram group as well. Okay. Now, today, is Sunday, 5th, which is starting the week, 19 so far in the year. So we want to see how the market is going to play out. So please do not write on the screen. Don't annotate on my screen because the video is already streaming on YouTube. So just you know, just as well do your best to comment and but don't annotate. You can ask questions, which is fine. Okay, now I will be looking at the daily time frame for this strategy and also doing some analysis with that. So the daily time frame. So we'll be looking at to prepare for the swing trades setups. Remember, these are swing trade setups. Okay. We are not looking at day trade at the moment. So we're going to look at a couple of pairs that we can get in even tonight or tomorrow morning and leave it till on Friday or till whenever they hit TP. If they can hit TP before on Friday, they can hit TP on Friday or even fail to hit TP on Friday. And they will close out depending on the conditions that the market presents itself. Okay. So we'll start with GDP AUD. Now, I hope you open your chart and you're going to look at that GDP AUD on daily time frame. Okay. Um, the reason I don't have light, kind of light on my face right now. That's why I'm not turning on my camera where I am. So I don't have light on my face. I hope you don't mind. I know some of you would like to see my face, but the camera is obviously the light is not so strong here where I am, and I didn't intend to turn on the light. Already, I've done a video this today as well in the YouTube, which is the weekly analysis. You already know me, you see my face, so I'm not hiding from anybody, okay? That's good. So if we already understood that, let's go. Now, if you look at the previous market in this, if you just look at how the market has been behaving in the past movement of this pair, you will observe that there are momentum. It moves in momentum. Of course, there were period of consolidation, but you can see when it moves, it moves. We can see that there's a consolidation area and it broke. And we can see a break, a little break there. And eventually, on that retest, it broke above it again and became another support. And now it's trading a little bit within that range, and then now it's trying to break below back, which is crazy though. But it's just one of the observations you need to have. And in most cases, when the market trade like that, it just shows that it's trying to find a trend. It's trying to locate a trend. Like for instance, you see, this is a crazy trend that you can see here that the market had. You see, this section was beautiful. If you were to measure that and you took that, you ride this trend up, that's a massive over uh 200 and almost 300 pips, or if not more than that. What do I mean by 3,000 pips? That's a long move to the upside. Okay, it's a strong push up there that happened. So long term trade. So looking at this pair like this, you can tell. Just look at the pair and see in history if it is a trending pair or is a consolidation pair. Now, my question to you, who can answer? Is this pair a trending pair or a consolidation pair? Question in the comment section. Yes, trending or consolidation pair? Just looking at it. I need to see it. I need to see a lot of you answering me. All right. Okay. All right. Okay, trending pair. So write it down, take notes. This is how you know. For those of you looking, my strategy, the strategy that I teach, that I trade, is called trend. I trade the trend. So I have to first of all look at a pair, and I'll look at it if it is a trending pair or a consolidation pair. And those are the two major moves in the market, really, trending or consolidation. That's the two languages that the market speaks. And you should know that. So look at the pair. As I know some of you, this is your first time of hearing this. But this is true. This is true. You should know this. First, discover a pair and know the trend. So this is how you know that, this is my pair. Why? Because it's a trending pair. This pair trends crazy. So you watch out whenever the trend starts. So now you know that GDP AUD is a trending pair. You put it on your notes, bookmark it, and tell yourself, I have a trending pair. Now the question is, in the current situation of the market, is it trending or consolidation? Who can answer that? The current situation of the market, is it trending or consolidating? Sorry, I'm a teacher by nature, so it's I might be asking you a question like this just to carry everyone along. So I hope you're catching it. I hope you don't mind too. I'm not trying to be bossy. I'm just trying to carry you along. All right. Okay. Let me see what these guys on YouTube are on. I'm not sure. I hope the guys on YouTube are following as well. Okay, let's go. Okay, here everyone is saying consolidation, consolidation just broke out. Someone say just broke out, consolidation. We should get to retest and then. All right, everyone is correct. We are actually breaking out of a consolidation because you can see the equal lows that the market just broke out from. So it has been consolidating for a while. See that? It has been consolidating. It broke out a little bit, it rallied back up into it. But this time, it broke out again the second time, then it rallied back into it by creating a lower high. So obviously, we see a structural break here. Okay. Now, this is when you start looking for trade because it's been consolidating based on this area. And now this is where you start looking for swing opportunity to trade. Okay, because it's coming out of that area of consolidation. So we just had a break of structure there, which is okay. That tells us that the market is getting ready to rally up. So at this level now, we'll be having a break of structure. So which is fair. And then we see price rally up. So here is the first drop of a swing trade opportunity that I'm looking at. So mark this. This is a good opportunity that we're going to be taking, but it's not ready. It's not ready at all. Why? Because we still have opportunity for price to drop to the low. So here is what I mean. This is if you go to the weekly time frame, you will observe that on the weekly, we have a break of structure to the low. Okay. Here, this market has been trending up. Let me just show you what I mean by order flow. All right. Let me just show you the order flow here. We see price push up here. Okay. By breaking the structure highs. And then this high was taken out. That's the order flow there. And then we have that break of structure. So if you stretch this out, what do you see? Break of structure. All these equal lows, liquidity grab, and price took high. Now remember, the rally, this drop, okay, this is the low that took out this low. So we have this drop here took out this low. So first lower low is when this structure was broken, okay? So that means we have from here, we can see the price took out that low. And then guess what happened? Price also took out that high, but here it created consolidation. Why? because this is a strong zone that the market fails to break. This is a liquidity zone, but it's a strong zone that the market fails to break. It has been creating that liquidity pool for a long time, so creating it as a support, resistance level, okay, which also rally out with this one, okay. You see price broke above retest and then drop again and then play around here. So this is a very strong area that price is respecting on the weekly. Now he rejected multiple times before dropping. So remember the reason why I said that the trade is not ready yet on the daily. I still think trade is coming down to this low to take out this low and then continue to the downside because of the structural break that we have here. The market has been trending for a while, going up, right? As you can see, market has been buying for some time. So we see this bullish rally. And then now the market swing low, created equal lows, break it by tapping the liquidity, rally up with a consolidation. So the consolidation, this retracement, it is for this, not necessarily for this structure. So it is for this. So it retraces and then rejected at this key price level because that was the support that it broke and then retest and then lower again, go back into that again and then drop. So I don't want to make my screen look so off, but I just wanted to show you what the market is doing. Okay, so now looking at this, we can see that the market is not going to buy it because it fails to break this high already. So this will be considered a new lower high to this high. I don't know if you're following because you can see here, that's what we see there. So now that means this low is a potential target. This low is a potential target. So, and that's weekly time frame. So that's going to take a lot of time. It might take 2-3 weeks. But if you go to the daily, which I've just done, you will observe that we may have opportunity to target this as a TP because this is our weekly low that we anticipate that the market will come to. So for that reason, that will become our daily target TP level. Mark that. It becomes our take profit level on the daily, not on the weekly, but on the daily. Because we can see that on the daily, there is good opportunity that price will come and use this as a liquidity grab and tap into it as a rejection. So it might come here and bounce off again the second time. Because that's the first of the major time, which is this was the first, this was the second. That is a zone area. That this is an area. If I was to put a support area there, this will be it on this candle, this very candle here. So I can have this area as a support. And you see price came up there and tap into it as a support. So that means this is a buy area for this pair in the future. And that means that can be our potential TP. You got it? So the best thing is to look at opportunity to trade it on the daily, which is already obviously playing out. Now, here is what I anticipate on this trade. I still feel that when the market opens in a couple of hours now, there might be another bearish candle, okay, that would tap into this price zone, this area here. Is a price action, as you can see this week. If you see this week, okay, let me just show you. Let me show you quickly so you can understand it. There, I'm talking about this week, this rejection that happened here on the daily. All right, that's a structure. That from that week to that place, that is a structure right there. Is somebody asking a question? Yeah, I will check. Okay, that's fine. We'll check on that, Michael. Okay, so this is what I anticipate that the market is going to do. Tap into this area Okay, market will tap into that area a little bit when the market opens. It's going to be another candle that will tap into the area, and then there will be a pullback. A pullback into this structure. So, and then there will be a drop. This is the trade we're waiting for. Now, pull back into the structure based on this candle here, rejection. So I would take that zone and up to the candle that rejected on the body, and that will be a resistance on this breakthrough, because you can see this is a structure here that the market just broke through, right? And then we are looking at pullback into this zone, because I can see there's a structure on the left that price may react to around this level. Okay, and then rally back up, and then we're looking for price action around this low. So this is where we're looking to sell it, in this area. Okay, on this pair. So this one is not ready yet. So watch out, do your chart like this. The way I'm doing it now, do it. Do your chart like this, leave it like this, and watch it. Put it on a watch color, whatever color you want to use on the watch list of any pair you're using, put it there. I normally use that color there. So you use any color of your choice, but you know that this is a pair that you are watching, you're looking at, you're waiting for price to take the next turn, all right, which is a pullback into that level, and then you're going to have a drop. If you eventually pull back, it's going to smash down and then come back to take TP here around this level. So this will be opportunity that we are anticipating to short from this angle, and then depending on the structure, then we'll target a minimum of 1 to 3. So obviously that high is nice, but structure here to put up there. So you have it. Remember, it's gonna be, you're gonna be entering it on the 4-hour time frame, and I will explain all of that. Especially if you are in the trading lab, you'll be able to get access to that. We'll be able to see price coming up and then tagging. So just ensure you have that made. Remember, this is swing trade strategy. You see, even on the 4-hour, look at how corresponding the structure is. Did you see that? How corresponding the structure is. So is a strong break. That is a break. So obviously on the 4-hour, we're bearish, which is very important. That's why the sell hold. So we're expecting that pullback on the daily, and then on the 4-hour, we'll find our entries on it. So that is for that pair. Let's look at another pair. Is that okay? Everyone got it? Is there a question and a comment? Are you learning something? All right. Somebody USD shelf. Okay, let's look at USD shelf and also NGD. So let's look at those pairs quickly. We'll just put them up here so we can get them. USD shelf for us, please. Where is it? Okay. Why is it showing futures when I say forex? All right, we have one that, let's use a one on it. And the next one will be AUD card. Okay, let's use AUD card. Let's use capital. We already have one that there, so I don't want to go all the way down to be searching for them. I just want to put them on top of that place on the watch list. So we use capital. All right, and the next one is Euro AUD. Okay, I'm not sure why you guys are giving me that. I just want to follow. Okay, Euro JPY. I just want to follow what you want, and then I hope everyone will learn from it. So we'll use Wanda on this one as well. So let's take this pair. If you have any other pair in your mind, you can bring it up. We already talked about GDP AUD, so we'll put that there. So we're anticipating a trade opportunity on GDP AUD. All right. So let's look at First, Euro JPY. Oh, beautiful. I took this trade. Come on. Where are the guys? Was it Euro JPY? Yes, we took Euro JPY. Come on. Who was in the trading lab when we took this? Let's see if I can get the trade out. Yes, that's the trade. Do you guys remember that?
Yeah, we smite the gun.
I just thought of it. I said, why can't I take the trade? So that's a great. So it was a smash 3 days ago. Yeah, it was heavy TP smash, crazy. So yeah, let me just show you what happened here. So um, now what we're looking at on the daily is now remember there's something here that is not obviously right with Euro JPY, especially all the JPYs. If you check all the JPYs, this is exactly how they look. They have this pattern. Okay. But let me go to the weekly and show you something. Exactly. You see this? This is the problem. So this is the problem with Euro JPY right now. So when we had this bullish momentum, obviously this was the news. This news did this long drop. Okay, that was last week. So we had a bullish run, and then this news just dropped. But obviously, we can see there's a structure here that you need to pay attention to. Okay, this structure here, which also I agree with this structure here because that's the break of the high. So we have a break of that high. Okay, so if we're to look at it properly, we will have it as a break of the structure high, but it's not really a high per se because price played around it and then it just broke and then create this zone, what I would call it. So now we have a strong resistance on the weekly, very strong one. So this is strong resistance here. Okay, let's go to the daily and see what the market does. You see, now the market has created something here on the daily. So you can literally extend this weekly low, this weekly support, okay, as beating into that consolidation level, which will obviously give you a reasonable structure. So for that reason, price is still playing around here. So what we want to see now is that either price reject this level and rally up, and then we can trade it, or we'll break this low. So for the time being, which of this candle did you think the retracement started from the bullish ride? Who can tell me? Which of these two candles will you consider as where the retracement began on this rally up, this retracement to the downside? Is it this candle or this candle? Who can tell me?
The
If you
blue,
understand the question I'm asking now, anytime you see this kind of structure, you get it. You won't be confused anymore. Let me see if anyone know what I'm trying to get. The red candle. Which one? This big one here, right?
the,
Is that? Okay. Who else? Okay. Let me see what people are thinking. The week. Somebody say the week. Well, that's one person. Okay. Let me check who was commenting on the YouTube ones. Let's see if somebody's getting it right on YouTube. I'm not sure, but I need to get you guys to say it. And so I don't want to just teach everything. My my aim is not to just teach you everything or just say everything. All right. So you should be able to ah, no one is saying it, so let me go ahead. Okay, let me see. Somebody says reddish candle. Okay, someone says reddish candle. Okay. Okay, everyone is saying reddish candle. Okay, let me surprise you with this. Okay, the reddish candle. Okay. All right, let me surprise you with this. Somebody says the red candle with the long wick. Okay, this is the trick. This is how they catch you as a retail trader. This candle is the trick. This is where they are trying to get you. Okay, the retracement. Let me show you. Begins here. I want to mark it. Now, the trick I just gave you now, not forget, you will come back later and thank me for it. Mark that zone, and I'll go back to the candle. So which candle is the retracement candle? It took me a while to understand. In my class, I normally teach candlestick behavior, candlestick behavior. Remember that? Yeah. So retracement candle is not this one at all. This is a common flag. So if you don't understand these things, you will be measuring with the wrong Fibonacci. You'll be using Fibonacci on the wrong structure, and you wonder why price is not respecting your Fibonacci. Because as what you consider as a as a structure is not actually what they consider as a structure in the market. They don't even see what you see, or you're not seeing what they're seeing. You see, so here is where the system began. Here. So what that means is, if I was going to use my fib, okay, I'm going to use my fib from here to that level. So that is on the daily. So now on the 4 hour, I'm looking for entries. How beautiful that is. So I'm looking for entries on the 4 hour. I'm waiting for a price to rise above my 61 and reject and retest on it and then continue up. So this will be my TP. That previous high will become my TP. Why? Because this fourth candle, they will have to fill it. It is a form of imbalance in the market. This one, they will come back to fill it. They are coming back to fill it. It's a form of imbalance in the market. This very candle. So you will not use it as your TP zone. So on this pair, I'll be targeting a long because the market is bullish anyway. So I'll wait for price to pull back, retrace. It will break above 61, which is not confirming that the market is ready to buy. Then I will wait for price to come back here, and this will not be my low. And I will target a minimum of 1 to 2 on this trade. Now, it could give you 1 to 3, but don't be greedy though. Don't be greedy. Get out on that minus 27. 1 to 2.7 is okay. Depending on the market structure, if this price open up today and price rally and then reject there, let's say the market did something like this, come to the 61 and then reject and come back here onto this level before bouncing off. Then and it bounce off and it comes here, okay, and then create another structure and then reject again to retest for your entry before going up, then this will be your structural low right here. And then you will have a clean 1 to 3. This will be your last stop loss. This will be your stop loss zone, not this one anymore. This will be your zone. But sometimes they can be crazy. They will come back and wick into this to remove the liquidity here. But it normally happens. So when they do that, that's fine. You go back in because they will retrace back up, break above 61, retest again, and then you go back in and just make your money and make your loss back and then have a profit on top. That's it. Done that so many times. So it's not a big deal. Some people think that trading is without losses. You're kidding. You can't be a professional trader without losing. There's no business without losses. You will always have losses. All you need to do is to manage the business. That's all. there's no business without incurring losses, or you may call it expenses or forgotten expenses. But the truth is, there's always a loss in any business. So as a trader, you will have market do this to you. They will take you out a little bit because you're putting your stop loss on liquidity. So that's fair enough. You see, that's fair enough. But sometimes you might go away with it. They might allow you and just rally up because there's also liquidity at the top here, though. So there's several liquidity that they can target. So if they don't take this out before it break above 61, then they might not take it out. They will just rally up. But if they want to, they will take it out before it break above 61. Then they'll come back to it. So this is what I'm looking for on Euro USD. I hope you have done that. You mapped it. So I'm going to move to the next pair. I hope everyone is taking note. The next pair is the UD card. Let's look at it on the weekly. On the weekly time frame, let's see what's beautiful is this pair. Ooh, it's nice. Beautiful. Beautiful bullish line. So we can see that the weekly high has been broken. So this is former structure high. And let's say price just break the structure. This is a break of structure to the upside. Okay. And then we have this zone here as a support. So obviously, right now, this is a liquidity area. I can see that on a higher time frame weekly. All right, let me just draw that so you can see. All of this place is a liquidity zone. All of this place. This is liquidity. This is liquidity. All of that is liquidity. Money is lying up there. So my guess is they're coming. They're coming for it. Of course, if I say we should target this high as a TP, that would be too far. It would take so many opportunity time and days and this weekly candle. But we can mark that zone out on a weekly high. So there's nothing wrong. Just mark it out on your pair. This is weekly time frame. So you mark that zone out, just take it out. That's fine. So we expect price to reject later, and this will be a strong resistance zone. Okay, we have that resistance zone there. And the next zone is obviously the structure here right here. Okay, you can see a little low which on this particular one, but we'll try to find that out on the daily time frame. Okay, but we already atomized two things. Number one, liquidity zone. Number two, strong resistance level. So now let's find the support level on this time frame. The support at the moment we can see is on this previous low. We can see here is a very strong support area. Okay, at this level. Okay, so if I mark it out, which is on this candle, and this is obviously weekly support, right? Weekly support right there. So let me just mark it out. This is weekly support. Okay, we're looking at that zone. Okay, and then we can see if we stretch it to the left, you see, it corresponded. So multiple times that zone was obviously respected. So we call it a support as our weekly support right here. Okay, so this is what we're looking at. You might say, well, this is a resistance zone. Don't make the mistake. Resistance, but liquidity. Right? Multiple reaction. And you can see what they did here. So now you can see the momentum of the weekly. That means they are targeting this liquidity already. So what we want to do is to buy along with them. We want to buy this market. It's already bullish here. You can see a break of structure here. And this high is obviously liquidity they are going to take out. The next candle of this week is going to go up. So that's what we're waiting for. And now we'll go back. Now let's take a look at the monthly first. You can see that. Even look at the monthly. This is monthly candle. What do we have? A W pattern. You see, even at this key level, you see, even this strong area, you see, market respected it over time. So if we were to mark out the monthly lows, this would be the monthly support low, you see, which is also agreeing with the just a couple of pips away from the weekly. So which is fine, we're fine to get that. And then you can see market just break off. Now he's targeting this area. You can see this is obviously a liquidity area as well. Now look at our long resistance zone from the weekly, which is also agreeing with the monthly time frame. If you check it, you see it's agreeing with the monthly time frame, which is also a very good area for price to rally back to as a TP in the future. Remember, this is a swing trade strategy, and we're looking at this. So the first thing is to see how we can take advantage of this on a lower time frame, which is the daily. Now on the daily, we have a breakup structure to the upside, a breakup structure to the upside. So we're bullish, which agreed also with the weekly, and it also agreed with the monthly time frame. Beautiful. So we're getting our confidence right. So the question is now, how do we get into this trade? That is the question. How do we get into this trade? What are the things to look for to get into this trade? Now, the few thing is this market has already created that bullish rally. Okay. So the two things we might do is to look for where price will break and reject and also take off. So what we want to see is that on the daily, this is daily time frame, guys. On the daily, we can see that we can use this as a resistance zone on the daily. First, we want to watch what price will do when it gets here. We have to watch what price will do when it gets here, which is already there. Okay, it's there. I want to see what price will do. So we take that out as what? As our resistance zone on the daily. On the daily, you stretch it over. Remember, I said it's a liquidity area. So let's stop there for now. So we want to see if price will pull back there. That's what we want to see. That's the reason I marked that zone. It could be possible that price will pull back. So what that means is two things involved. The market could pull back with one candle or two and just consolidate for few days, 1 or 2 days, and then continue to take our liquidity. So the next thing you want to pay attention to is what is the possible structure for price to bounce back into is here. This zone, this area. First of all, this structure where it broke. So we want to see that price break come into that level of little minor support and then bounce off. So what we will do is to ensure that we see a red candle first. At the moment, okay, look at that. On the 4-hour confirming that it could possibly reject from here. That's beautiful. So on the 4-hour, we can see a confirmation that price could possibly reject from here and come back here. Okay. So if it's going to do that, then the beautiful thing is this will be our target, this liquidity pool. Remember where this liquidity pool is coming from? The higher time frame, the weekly. So this will be our target on this pair. So we are bullish, we're looking for opportunity to buy it. So we want to wait for a pullback into this structure. You see how the 4-hour confirmed the structure very beautifully. You see, the 4-hour confirmed the structure here. So we should anticipate that price will come there and tap into that zone. You could say there is an order block there, which is fine, but a structure is obvious. So we want price to come into that level and rally up. So at the moment, on your 4-hour time frame, watch this zone. Watch what price does here. Once it starts coming back down, just wait for it. Do not try to set the market. Just wait for a buy. That's why I'm doing multiple pairs. Don't force, don't try and create a system. Don't do things like that. Sometimes people don't. I told you when you want to look for a trade, first of all, check the pair. Is it a trending pair? What kind of trader are you? I'm a trend trader. Trade the trend. All my system is surrounded up with trends. Okay. I trade the trends. I have a trading system that trades consolidation. It's called Fractal 1.0. The Fractal 1.0 I've already released Fractal 2.0. Fractal 2.0 deals with the trend. And I also released another strategy which is called ICI, which is the one I'm using now. The ICI strategy is majorly swing trade. Of course, I have the day trade strategy, intraday trade strategy with the ICI, but it's not what I teach. I don't teach that at the moment. I've back tested and I've used it several times on my own personal account trades, but I've not taught it in public. But this particular one is a no-brainer because you can see that the market is a trend right now. So don't even try to see it as a consolidation. It's trending. So just trend. It's breaking out of a consolidation from the weekly. So it's going to start trending soon. So for that reason, even on the 4 hour confirming that it's trending crazy. I mean, just check the order flow. If you check the order flow from here to here, you can see a breakup structure there. Okay. And then what happened? I rally up and break another structure. Just a minute. All right, then, chess. And then price break another structure here. You see it breaks it. It just keep going up. And then it took out another high. Guess what it did? It stayed there for a while. And then guess what it did to the low? Liquidity. It swept liquidity. It swept liquidity. But as for our liquidity graph, and then the next thing is the rally up to break the high. Look at that. It broke the high and make that place a structure. You see, it makes it a structure and then it just swings. Now, this was news. Last week, this was news. You can see the start here, that this area here, that's a spike. I think that should be one of the news. I'm not sure. This should probably be news to push up and make this one happen. So it's still bullish. That I'm trying to just show you that this pair, AUD card, is a bullish market. So all you need to do is to wait for a pullback. Don't buy it. I mean, don't sell it. And don't even try to buy it here. Oh, the market just opened up. So you should wait for price to pull back and watch what it does. Okay, market on your zone. Please, which indicator on is on your screen that has those green and red arrows? Red arrowheads. Okay, it's called fractal. It's called fractal. It's a fractal indicator. That was the system, the indicator that I built my first system on, which is called Fractal X. All right. Okay, I think we're done for this. Can we move to the next one? USD Chef. Okay, let's move to USD Chef. If you have any questions, please do ask. Yeah, all right, please ask. Don't just don't assume. Just ask. Okay, I'm looking at the weekly, and if I may ask, are we trending or we are consolidating?
Trending.
But trending, is it downtrend or uptrend?
Uptrend trying to reverse.
Okay, one person is responding that. That's good. Who else is confirming that? Anyone confirming with a comment in the section? Let's see if anyone's commenting. Let's see to confirm what is the thing. Who agree? Downtrend, someone said uptrend. Okay. I want you to know, I will want you to uh, pay attention to that. If it is uptrend, I will let you know, but it's not. But it can be, but I don't know. Someone says higher high, higher lows. I mean lower highs, lower lows. Okay, all right. Let's see. Now, remember, before you take a trade, you must know the direction of the market. Is it trending or not? If it's not trending, why would you want to get into the market? You should be able to look at the market that is trending to get in so that you can join the trend. The trend is your friend. So, question, is this currency pair? If I'm going to take a trade today or tomorrow or this week, is this currency pair trending? That's the question. All right. So we are up on a downtrend. So the market did some very nasty things here. Very nasty. See what it did? Crazy work that the market did here. Crazy thing. Okay. And then rally up, use this as a base, broke it, and then use this as a base. And now it's using it again as a resistance. If you can mark the chart like this first, just know what the market is doing. So that means this whole area is not a strong weekly, this area here. It's not a strong, let me just highlight it. It's not a strong weekly what support that price will come to in the future. If he breaks above this area, okay, you should target this area up. So at the moment, we're not looking at buys at all until price break this high, because this high is higher than this high. So this is a lower high that just got formed. Therefore, we are bearish. Always understand that. So first, let me mark this zone as our resistance zone. Okay. Then this is just a consolidation phase. So we could now mark this area on the weekly, since we already find that this is weekly time frame. Remember, this is that price is trending down. So this will now be our recent week, our recent what do you call it? Resistant level. Here become our recent resistant level. We'll take this one as our recent resistant level. We are not buying until price break above that. Period. Period. Okay, so that's clear. But pay attention to what price did here. All right. So we have a structure here. So that could be a little liquidity pool at that level. So we can anticipate for this week. This is a weekly time frame. This is weekly time frame. This is weekly time frame I'm marking out. So for that reason, it's a long-term period. So market could move a long way to this level. So you want to pay attention to that. So here is potential TP area. Where I just marked now is called potential TP zone 1. So this is obviously another potential TP area, which is the lower part there. This area is the second level we can look at price coming to take TP in the future. But right now, we're looking at selling this market. Why? If you look at the weekly, you can see what price is doing. It's downtrend all the way, pumps, push up, arms. You see, push up, arms, push up. Now took out liquidity here, and then created. Even though you see all this area, you see this area, it came back to respect it, then smashed down. Even though it pushed up here, you should not be looking for sell. I mean, for buys at all. You should be looking to sell it, because this is obvious. This area is obvious that price was going to reject from there, and it did reject to give a sign, and then pull back a little, and then drop. So that was a break and retest, and then came back all the low to took out this low. So we have, this is now a new structure, lower low. So at this level, price just retraced back up to give you equal high. So it retraced massively to give us equal high. Still tempted with this structure going on here, and then we should anticipate that price will, at least, let's assume that price will start buying from here. Let's assume, but we should take our TP here. Even though it start going up, no problem. Then when it break above this high, we wait for pullback, and then we will not buy. Until that happens, we are not buying. But we have opportunity to sell right now, to sell to this level and take TP. If it breaks below that level, then we will wait for a pullback and sell to this level for TP. Period. So on this pair, USD share, I will say first mark it the way I just did, and then go back to the daily time frame and watch. Now on the daily, what do we see? We have price rejecting at that support level. So I will remove this area now, this one, Just remove this so you can see clearly. So we see price rejecting at that resistance level, not support, as a resistance level on that we should mark on the weekly, that weekly resistance. And we also see that price is intending to break the structure, which obviously that's a minor structure, consolidation structure. So what we're anticipating is that since the market just opened up, right? This is daily. So we want to see that possibly this liquidity is taken because we can't trade it now. We can't just jump in and start selling. We have liquidity here. Okay. We have liquidity. So that liquidity it had to be taken. We need to see that they took out that liquidity first. And before they will rally, they'll still continue to the downside. You can't just buy now because the weekly is bearish. If the weekly is bearish, therefore you want the daily to be bearish to agree with the weekly, and then the 4 hour will be bearish to agree with the daily, and then you take your trade. That's how you do it. So in reality, at the moment, it's beginning to announce himself in the daily time frame that it's going to be bearish. But we want this low to be taken. So we want the next candle to sweep the liquidity. They will do it. Watch out. They will do it. They will sweep the liquidity, which will be on this candle. Like it will be a drop, and then they will rally and pull back. Now, this pullback, I'm not sure which area they might intend to come, but I'm suspecting this liquidity area, this mini consolidation. They might pull back into that area, and then this will not be your trade. Remember, it's a swing trade, so you have to wait for that to happen. Don't force the trade, wait for it. It may not come all the way low. It may come somewhere here, take our liquidity, and then retrace back up, and then reject at this key area here. Let me just mark that area so you understand what I mean by the key area here. You see this low from this level? Let me just use this where this level is. That's not what I wanted to use. Let me use the right tool. From here, I'm talking about this area. Okay, I'm looking at that area. So I'm going to mark it as a resistance. As a resistance area. You see? Beautiful. Beautiful. So I'm expecting them to come over there. If they break first, I expect them to break structure. So to break this, so what do? Set an alert on that liquidity pool. Wait for them to take it. Once you have liquidity sweep and there's a candle that break below it, that's when you see a break of structure as well. So two things involved, liquidity sweep and a break of structure. That's what you want to say. Liquidity sweep and a break of structure. So that liquidity sweep will also be a break of structure of that low. Those are the two things. That's why I'm setting an alert. I want to see those two things. If I don't see those two things, I'm not going to trade it. So you have to give me a liquidity sweep and a break of structure. If those two things happen, then I wait for pullback. And if the pullback begin to happen, I know that it's a no-brainer. This trade must play out. It must play out. But I'm concerned about this low, this liquidity, this area here. So I'm going to mark out another daily area of TP that is obvious, which is here. Okay, so I will see this one as a support. So that will be my first TP. So when price get there, I will take 80% of my profits out of the market, and I will break even, put price in a trade free setup, and then just leave it, let it run. If it comes all the way down here into this level, that's beautiful. If it doesn't, I've already made my money anyway. I don't need to worry. So this is what I'm looking at on USD share. This I'm looking at. Do you understand? If anyone understand it, please let me know. If you don't understand it, also let me know. Listen, just use the comment section. That's what I'm trying to say. Use the comment section and talk to me. Let's see what your condition is on it. If you understand it, yes or no. Hey, we have someone telling me to check GDP JPY. GDP JPY. I think I have that pair somewhere there. Hmm. That's from the YouTube comment. So someone asked me to check GDP overall trend. Okay, let's see. Understood, clear, good. Yes, good, good. You make it look so simple. Nico. Okay, tell me, why is he not? Why are you sounding like that? Of course it is. Of course it is. I'm not saying it's simple without work. No, if you put in the work, come on, you've been following me. I believe you've been following me for a long time. If not, maybe you just join me. There are those who have been following me for a long time, at least for another 1 plus or 2 years. So they've been following me. They know that all I do is technical analysis. I look at the market. I I try to predict the direction that the market will go. And I've been doing that for a couple of years. Every week. I do it every week. Okay. So I'm not the kind of trader who will say I made 5,000, 10,000 now. Then follow me on my YouTube because I'm making 5,000, 10,000, 20,000 now. That's not the issue. I don't do that. If you check my videos, I don't show results of money on it. But my 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 team, those in my mentorship, they know that we're smashing. So they know that. So those in the trading lab, they also know that we're making money. It's not like we're talking. In fact, if you watch the video, you see that every analysis, the way I do it, 80% of the time is in that direction, except the market decide to do something else. So that's what I'm looking at. Okay, let's look at GDP AUD. Sorry, is it GDP G GBP JPY? Okay. I'll just look for it here and add it up, and that will be our last one for tonight. So if you have any question, prepare it. If you have any concern, also let me know. Let's use Wanda on this one. Hopefully it gives us a nice chart on it. Okay. You know, I told you earlier on, all these JPY pair, they're the same. If you if you watch my analysis on Euro AUD, which is this one, you should be able to trade GDP, GBP, JPY. Okay, it's gonna be so, but I don't think they are ready to go up still. On this one, Euro AUD might be able to take out a little bit of liquidity before going up. So if it drops, we will extend it, except price break below this area. Okay, and this is daily. Let me just quickly mark this out so you know what area I'm talking about on this pair. I will do it now in GDP AUD, GDP JPY. So here, except price break that low, and then we are not more looking for a bar, we're selling it. But as long as price is still trading above this support, this daily support that I just marked right now, um, you just look for buys. That's all, because we're bullish all around. So this is a retracement of this long rally that happened. Okay. And I told you where the retracement began on that pair. So let's look at GDP JPY. The same thing here, we're bullish as well. You can see market is rallying up. So let's look at it on the weekly. Now, on the weekly time frame, we see a beautiful spike. And this is news anyway. So what I would do with this is very simple on this particular pair. This particular pair, I would rather take this low, this weekly low, as a strong support area, and I will extend it to the left. You can see that is already agreed with that. So I'll take it to the left. So again, there is another one here, but this one is the most recent. So I will have another one here. Okay. And if you extend it to the left, it agrees with the previous structure as well, which is beautiful. That's how you know that you are choosing um, the right structure, okay, or support or resistance levels. And the weekly time frame, especially the higher time frame, holds more grounds on this particular um, um, support and resistance levels. They hold ground more. So here we have a strong weekly resistance level right here. So now you marked your zone on the weekly. You've marked your zone on the weekly. It's well stationed. Now, this is your area of trade. This is your area of focus. And because it's bullish, we'll be looking for buy because price is close to our buy area. That's number one. And secondly, I believe this imbalance had to be filled. This other imbalance that they just created have to be filled. This one is already filled. They might want to fill this one up because it's still bullish. This was a news impact. This one was impacted by the news. So they may rally back up. So for that reason, they will take liquidity. So I believe they will tap into this liquidity here. There's a lot of liquidity here for buyers. So let me show you what I mean. I'm expecting them. This is weekly. I'm just saying that that as this week begins, they might drop into this level and then close with a week. They will close above this thing, but leave a week to tap into this area. And then they will rally up and then go bullish. So this is the tricky part of this GDP JPY compared to every other JPY, even compared to the Euro JPY. You see, the way I'm looking at this GDP JPY is different from the way I looked at the Euro JPY. Why? Because of structure. They didn't leave the same trace of structure. You see, so even while obviously, for those of you that trade JPY, is very volatile. It moves crazy. So it can use one candle to drop while Euro JPY is still moving with a very small movement. Okay. And then this one will just drop, tap into the liquidity and rally up. And they can do that. So for that reason, you have to be very careful when you see things like this. So this is the liquidity for them. And they might smash it and then use this last support area and then they will use it as support and then break above this and then use it as another support and then rally up. That can happen. So at the moment, I'm just anticipating that this will be what they might do. So let's go to the daily. So we mark this also. On the daily, it looks so very, very clear now. See, it looks so clear on the daily. So we can see that on a daily, that this is a very strong liquidity area. So there is a very strong reason for them to come here because it's liquidity. So they may tap into this area, take out liquidity, and then bounce up from there and then rally up. But this is the buy zone. So you want to see that they drop. Listen, you want to see that they drop. If they should, they drop and then reject. Okay? You want to see that. They want to reject. Now, at that rejection, and I'll tell you what to do. So let's assume they drop into that area. It's still a bullish ride. Do not miss it. It's still very bullish. As you can see, this was a low structure that rally up. This was a structure that rally up. So you can see they may reject here because of the price action, but we already broke below that. So I'm thinking they may weak a little bit and then start pushing back up, which is fine. So we can see that this is an area that they've already taken out liquidity. So this one is no longer relevant because we can see price already broke through them. So this is the next one that they are targeting. So this is the structure here, which is nice. So I will be focusing on this retracement. So all I need to wait for is that price start pulling back up with bullish. I need to start seeing price pushing up with bullish. So it may extend to this level, it may extend here. So what I would do is to put my fib here first. This is daily time frame, and I will target my high there. Remember what I did with Euro JPY. This is where the retracement began. Not this candle, but this candle. Okay? So this is what I'll do. So as long as price is still trading in this zone, if it has not broken and it start rallying up, then I'll wait for price to break above 61 and I'll target that level. But if it pushes a little bit down, I will still move my fib to that level. But right now, I will leave it there. So I'll go to the 4-hour time frame and I'll wait for price to break above 30 of this 88 and also break above 68, 61. That's what I'll do. I'll wait for that to happen. So it's a buy zone area. So two things may happen. They may try and drop and take out liquidity and then reject at this level. That's fine. And then start rallying up. So take out liquidity here, and then they might create a structure, bounce off of this structure, then break above 61, and then come back here and then rally up. Now, at this level, they have given you potential buy structure. This is on the 4-hour breakup structure, and then pull back and then push higher. Then this pull back, that's where you buy. So at this level now, you'll be targeting 1 to 3 or 1 to 2, depending on the market structure that you see. But at the moment, it's not ready for that. So we're looking for buys from here. Or depending, if market leaves structure, we might target a structure. But I will always advise, let your trade retest and break above and retest from 61. Sometimes they will tap into in deep like this, but depending on the market structure. So let's say the market structure target this level. So there's a structure here. So you might put it there as your entry. And then your stop loss will be somewhere here at the low because of the last low, or here where they leave structure as well. They might leave structure here. So you put it a little bit lower at that structure because there's a structure here already. And then you can target this area, which is your TP. And that will give you 1 to 3. But I always advise, don't push towards 1 to 3. Just take 1 to 2. Always try to start taking little baby steps into risk to reward ratio. 1 to 2, 1 to 1.5, 1 to 1.5, 1 to 2. Then before you start stretching to 1 to 2.5, 1 to 2.7, 1 to 2.8, before to 1 to 3. You see, don't just move to 1 to 3 trade. Sometimes the market will humble you. When you are supposed to take 1 to 2, you didn't take it, price will come back and then smash you out on a stop loss or take you out on break even. You will regret it because you're supposed to take TP, you didn't take it. You wanted to hit 1 to 3. And sometimes the market will say no. So always look at what suits you, that level, when it comes to risk to reward. Don't follow those social media stuff that they say 1 to 14, 1 to 10, 1 to 6, 1 to 8. They will tell you that just the way they are getting 1 to 8, 1 to 3, they will lose many trades like that. And sometimes the market will take them out. So it's not the time they always get that 1 to 8, 1 to 6. You see. So learn. And you also, you are not in competition with them. Just trade what you see and be better. That's all. I think that's my last one for today. I hope everyone enjoyed the session. Any question? On my time frame, it is advisable. Oh, sorry. On what time frame is it advisable to enter the trade? After analysis on the 4-hour time frame. No, I don't analyze on the 4-hour time frame. That's the time frame I'm entering. I did my analysis from the weekly. I hope you've been following us, Nico. Have you been paying attention, Nico? It's a swing trade. Swing trade, you don't enter below 4 hour. Your entry time frame for swing trade is 4-hour time frame. You have to do analysis from the weekly and monthly. You see, sometimes I will go to the monthly and then come back to weekly and then daily. From daily, and I'll tell you, okay, this is what I'm saying. Then we're looking at entry on the 4-hour. All right. watch the video again, watch it again and again, you get it. So for those of you here, you have opportunity, you have seen how we do things. So if you're interested on one-on-one, you can get in touch. I'll tell you what would it cost you. We can talk about if you just want a session off, I'll talk to you about what you need to pay to get a session off me, and I'll teach you, guide you through in a day. Or if you want to have um 1 week, 1 month, or two months with me one-on-one, just let me know. I do one-on-ones on that. So it's it's something that you want, you let me know. Or you can join the trading lab that we already have, which is where to let me see. Yeah, you can see the link right there. That's the link. So if you go to the YouTube right now, you'll be able to see it. I know some of you are finding it difficult to enter this use this site from Nigeria, especially from Nigeria. Just use VPN. If you use VPN, you'll be able to get access to it. Please, were you able to sort out the seller platform for Nigeria? Not really, because they were requiring me to send the Nigeria company address and all of that, which I've not really able to do because I don't live in Nigeria. I live in the UK. So I think that's one of the criteria for them to for you to get paid from their platform. So you must have a Nigeria address and all of those things. So for me, I do not have time to set that up at the moment. Well, I'll work on it. I'll see someone who can. I'll see what I can do. But at the moment, not yet. Okay. And that's why you need to, if you want a one-on-one or a section where you want me to send, you want to get access to my course, just let me know. Send me contact. Then if you live in Nigeria and you can access my course and you want my course and you want to purchase my course, I will make a special arrangement for you. And all I need to do is to email to you, give you access to the videos as well. And for those of you who want one-on-one, which I emphasize that you get in, because that will make me understand you as a trader and also deal with you personally, not in a group. And then afterwards, I encourage you to take the necessary step based on your trading, your trading journey, so you can always get in touch. And to get in touch with me is very simple. You have my Telegram group. You have my Telegram group. You can contact me there. Otherwise, um, write to me. I think my Telegram link is on the YouTube channel. Let me just give you. Yes, my Telegram ID is very easy to find. If you're in my Telegram group, you always get in touch. Just send me a message on Cbran FX. Let me type it up so you'll be able to, for those of you who interested. But you can always send me a message, guys. Come on, you know where I am. You can, all right? So it's easy to find me. It's easy to find me. Let me see. Yeah, it's there. That's TikTok. Let me see. It's on my YouTube channel. Yeah. Okay, that's the one. So yeah, let me just send you let me send it to the group. You'll be able to see that today. Zoom link. So any question? Let's take some questions, please. Let's take some questions. I want to take some questions. Any question? Do we have any question?
No question.
All right, that means it was well understood. It was well understood. So I will give you, that's Charles underscore Brown FX. That is my Telegram link. So I'm in my Telegram ID. I think it's at Charles underscore Brown FX. Okay, that's my Telegram. You'll be able to get in touch on me, both with me there. So yeah, I think that's it, guys. And I've not been able to do other pairs. There's a lot of trade opportunities on all these pairs. A lot of trade opportunities this week on all these pairs that I have not been able to go through. It will take us about 3 hours to go through all of those. So that's why you have to learn the skill. If you learn the skill, it's just about you sitting down there and just going through all the pairs and then thinking, oh my God, look at this. I mean, I just click on that randomly and look at that opportunity right there. Just look at that beautiful opportunity right there. Price is about to start pushing up. This liquidity is massive. They will not look back. They are taking it. Look at the imbalance. My goodness. What a pool. What a pool. Look at that. Nah, I'm not going to do this right now. If I start, my hands are itching me to label, to mark out the zones. I mean, we'll look into that tomorrow, hopefully. Let's see another one. Okay, that one is kind of looking bearish. Yeah, GU already marked that. GU is still gonna go up, really. And this one, yeah, we're expecting them to take. We've already done that. Yeah, this one, we're expecting a sell on this pair. Remember this pair? We're expecting a sell. That was the first one I did. So we're expecting a sell on this pair. So I think I should mark that zone out. But you already have it. Let me just push it a little bit more. We have an alert there, a break to the downside. All right, let's see another pair. Yeah, that one is getting ready. Liquidity is strong. It's beautiful. We can see price just broke below. So that support there, price just broke below. And then we should be expecting them to tap lower and then retrace. On the retracement, you said sorry. So let's see, this one's consolidating. Let me see this one. Huh, huh. That one is a tricky one. It's tricky. This one. So we just did something on this, did we? No, we haven't. Let's remove the drawings. Yes, you see, this is a very good pair. New Zealand JPY. This is a very good pair. This could very respond to what I did on GDP JPY and Euro JPY. This will respond even quicker. I'm looking at it from the daily right now, and we can see that this retracement is already begun. Now, let me show you something on the line chart. That's where the retracement began, right there. So if I was going to mark it, I'll use that as my zone of TP. So I'm looking at a buy. So I'm taking my TP there. So first of all, I'm going to have to stretch this from the retracement, really, from the retracement candle, not on that candle, from the retracement candle, that candle. So I'm possibly waiting for price. That's on the daily time frame. Possibly waiting for price to come over here, close above it. Now set an alert. I want price to close above it. If not that, I can make it even easier, put it a little bit lower where the 68 is, 61 is, and I will have price close below it. I mean above it. Back close. Set an alert there. See? So immediately it triggers, I'll come back and watch. So all I need to see on the 4 hour is a price break it. And then there will be a retracement on that, and I'm gonna buy. I'm buy because I already marked out the zone. I already know what they are, what is going on from the weekly to from the monthly to the weekly and also to the daily. So that's why I can take that trade. So that's one of my strategy on swing trades. And so if you practice it and you can really begin to work your way around it and start making some good trade on it. If you don't understand it yet, that's fine. That's why you have to contact me and we can do one-on-one on you. So you'll be able to get it. Look at that beautiful setup again. Oh, nice. So we see this is not again another JPY items, what do you call it, pairs are just, you know, giving me some good opportunity. So I might be looking at JPY this week. This is nice. Okay. So we might be looking at a lot of JPY this week. So let me just, I like those JPYs. At least one must play out. No, no, not even one. All of them should play out, give or take. Okay, we have this pair. This is beautiful, but we can see this strong momentum. So now we have a breakout structure to the upside. So we must still wait on Euro USD. Yeah, I think I already did analysis on Euro USD on my weekly analysis. So go check it out. I already did that. And then at US 500, I already did that. We're looking bullish to buy on that. I already done this just now. This pair is crazy. I don't know what is there. Actually, should check it out. Look at USD card, AUD card, crazy. Man, this is beautiful. I'm waiting for something here. Crazy. I'm waiting for something there to join that beautiful trend. And this one as well, to join this beautiful trend that just began. This is nice as well, to join that beautiful breakout structure. Okay, now this is one of the JPY that I don't like. It's called USD JPY. It will give you something else. Now, I don't normally trade this pair. It's crazy, but I'll just keep it. I rather trade every other JPY pair, but not that one. Not USD JPY. There's so much battle between them. This is a beautiful setup playing out right here. Bullish. So how come this thing is not counting? So it's FMC. So we're looking at price action around this to start pulling back up, and then you buy. This is a buy trade. I will be looking for that. Looking at that actually. Okay. Beautiful rejection there. So that zone there is a monthly or weekly resistance. Okay, I'm not gonna look at that. I think we already done that. Yeah, we already done that earlier. And then we already done this. Then Euro, there's no opportunity there yet. This one as well. This is another CAD JPY. That's another problem with this. This one and USD JPY. CAD JPY and USD JPY always have the same correlation. So stay away from them if I don't understand what they're doing. Like this one now. And there's nothing here. Just giving you an equal highs. This one as well, still dropping. And this one, this is beautiful M pattern forming. So if you break the structure successfully today, by tomorrow, you should be looking at a sell. But that pair is a crazy pair. It's called exotic pair. So these are mostly exotic pair. Be careful with them. Yeah, this is beautiful. This is beautiful. It's getting ready as well for swing trade. That one is dead. That one is nothing. There's nothing there. Beautiful, beautiful, beautiful. This one is getting ready as well. There's nothing there. This one is getting ready. There's nothing. Oh, this one is absolutely a news impact. There's nothing here. This one is the JPY card. How many card JPY do I have? Get out of there. There's no one. AUD JPY. I think we've already done this. So there's several other pairs that are multiple. So this one is good, but they're still pushing up. Let's see something else. This one is still nice, but no trade. This one, this is a possible sell. If you start retracing, you just need a proper retracement. So let me unlike that first. And this one, nothing there. This is a buy opportunity coming up right here. So AUD chip. Okay, I've already done that, isn't it? And this is another one, USD. Why is there many of them? Okay. All right. There's nothing here. Okay. And obviously, this pair will do well. This one. So I know the kind of push is nice. So they might start looking for opportunity on this one now to buy this market. That is South Africa, yeah. South Africa rand and Japanese yen. That's a pair. It's an exotic pair, but uh, if it goes in your favor, you'll make some money. So this is the one I talked about this week. So on the weekly analysis, go and watch the video if you haven't watched it, and make your comments, and also subscribe and hit the like button on that YouTube channel if you haven't done so. All right, guys, this is the end of the show, and I thank you everyone for being part of it. I hope you enjoyed this section. If you have anything you want to say, you know where to find me. For those of you on the YouTube, thank you so much for watching, and hit the subscribe button, hit the like button, share the video, play it as long as you want. If you have any question, you know where to find me. All right. So I'll see you guys later. The week begins tomorrow morning for me. I'm going to start looking at trades. So I will be having my mentorship class with my team tomorrow by 9 a.m. So for those of you planning to join us, you can join us at that time, but ensure you already have a subscription with us, either from the daily trade analysis or you have one-on-one session with me that will qualify you to join that mentorship class.